All right, good morning. I'm always impressed at the turnout at 8 a.m. on a Saturday morning for an economic outlook presentation, especially after many of you were probably out celebrating Mardi Gras last night. So I appreciate the attendance. So I want to thank you for the opportunity to present the National Cotton Council's economic outlook for U.S. and international cotton markets. So while the presentation will focus on a few highlights, the summary and the full report will be available at the end of the session. Now, we did something a little bit different this year, and we'll be handing out a printed copy of the summary, but the full report will be available on our website, and it'll be available shortly after the presentation. So I know many of you were planning to read the 70-page document on your flight home, but you may have to wait till you can go home and print it and read it there to get you to sleep at night. So, okay, so this past year can be characterized as a year with significant uncertainty and volatility in the global economy and the world cotton market. While the U.S.-China trade dispute continued to impact world trade in 2019, the trade tensions continued throughout most of the year, but I will say that towards the end of the year, I think we did see a little bit of stabilization. Now, overall, cotton futures traded lower in 2019, but we actually ended the year near 70 cents. And despite the political uncertainties surrounding the Trump administration during 2019, the U.S., China, and world economies continued to expand, although it was at a slower rate than previous years. China continued to reduce stocks to a maintainable level, and they're now in a position to become a larger importer in the near future. However, with the implementation of those Chinese tariffs on U.S. cotton imports, that did lead to a decline in the U.S. market share in China in the last 2 marketing years. So the latest USDA production estimate is 20.1 million bales for the 2019 marketing year, and that's 1.7 million bales higher than in 2018. Now, planted acreage was lower in 2019, but harvested acreage was higher. So the latest ginning report shows about 19.5 million bales have been ginned, so we could come in lower than the 20.1 number. Now, as we look across the regions, in the Southeast, production rebounded from the lower levels observed following the hurricanes. We did see a decline in production in the Southwest in 2019 by over 500,000 bales, and that was just due to a tough growing season plagued with a variety of weather issues, such as excessive rain during planting, drought, high temperatures, early freeze. If it was a possibility, I think they had it somewhere in one of the regions in Texas in 2019. And the 2019 Southwest yield was actually 583 pounds as compared to 748 in 2018. Now in the Mid-South, we actually saw a pretty big increase in acreage by 400,000 acres in 2019, and that was the highest level since the 2011 crop year. So looking at mill use, the latest USDA estimate, and this is from, of course, USDA released their February report on Tuesday, is 3.0 million bales basically, so just right at 3. Now, based on our NCC monthly mill use survey, we're actually seeing mill use estimates come in a little lower, so that number may be a bit optimistic. So USDA is still projecting exports of 16.5 million bales for the 2019 crop year. And given the current pace of sales and shipments, this is attainable. And even though we've had the continued U.S.-China trade disruptions, U.S. export sales have actually been relatively strong for the 2019 crop year, particularly to markets such as Vietnam, Pakistan, and Turkey. However, if we're going to reach 16.5 million bales by the end of this marketing year, we're going to have some really strong shipments through the remainder of the year. So we're definitely not there yet. So with this balance sheet, we have ending stocks of 5.4 million bales, and that would be the highest level since the 2008 crop year. So taking a closer look at exports, exports reached a marketing year high of 373,000 bales for the week ending February 6th. This brings total sales to almost 14 million bales in the 19 crop year. Now, comparing that to the 18 crop year, at this time last year, we had sold 11.5 million. So we've shipped 6.3 million bales. We shipped the highest number on a weekly total on February 6th of 420,000 bales. So again, getting to that 16.5 million bale number is doable, but we have to have very strong shipments. And while export competition from Brazil remains very strong, the U.S. has had increased opportunities for export sales in the 2019 crop year. And part of this is due to lower production in Australia, Pakistan, and Turkey, and that allowed us to have higher export sales. Now, prior to the implementation of the China tariffs, the U.S. was in a great position to increase imports to China. Of course, now with that tariff in place, the U.S. has had to give up some of that market share, and Brazil has came right in and taken a lot of that. So based on the current level of sales commitments, U.S. exports to China are estimated to be just right at 2 million bales. We'll go 2 million bales. So this would be a slight increase in the U.S. market share of Chinese imports to 23%. So in the 2018 marketing year, we shipped China 1.6 million bales. So this is definitely an improvement over 2018 if we actually reach 2 million, but this still gives us a U.S. market share in China that's well below historical averages. And again, we've got a lot more to talk about, but we'll talk a little bit about how potential shipments to China could be impacted, of course, by the coronavirus. So with higher lint production in 2019, cottonseed production is estimated at 6.2 million tons for the 2019 crop year. And based on the USDA balance sheet, larger supplies and lower prices result in more feed use in 2019. Okay, so now to the most exciting part of the presentation this morning. We're going to take a look at the outlook for U.S. production. So as in the past years, the prospects for the U.S. crop are based on the results of the NCC Planning Intentions Survey with assumptions made for abandonment and yields. So surveys were distributed on December 15th, and responses were collected through mid-January. Respondents were asked to give their plantings of cotton, corn, soybeans, wheat, and other crops for 2019 and intended acreage for 2020. Once again, we have to remember the survey is a snapshot in time based on grower intentions. Of course, changes in markets and weather will cause actual plantings to differ from the early season intentions. So what did we look at during this time period from mid-December to mid-January? We'll take a look at where prices were. During the first half of the 19 marketing year, we know that the December 19 futures contract was trading in the mid to upper 60s. Prices declined throughout May to September, reaching a low of about 61 cents in September. Since reaching that low, prices have came back up, though, and they reached 72 cents by the end of January. When we look at where prices were as compared to a year ago, cotton futures are trading a bit lower. You see corn futures trading a bit higher. You also see soybean futures trading a bit higher. So what we see basically is a decline in the price ratios. And it's important to call attention to those ratios because whenever we do see a decline in those cotton to soybean and cotton to corn price ratios, it generally indicates a decline in cotton acreage. All right, so we're going to begin our review with the Southeast. So in the Southeast, survey results indicate a 9.3% decrease in the region's upland area to 2.7 million acres. All states show a decline in the Southeast. In Alabama, the responses indicate a 4.9% decline in cotton acreage, while Florida acreage is expected to decline by 2.2%. In Georgia, cotton acreage is expected to decline by 11.9% to 1.2 million acres. North Carolina, 8.4% decline. South Carolina, 10.7% decline. I say that? Yeah. No, South Carolina was 10.7%. North Carolina was 8.4%. Virginia decline is 3.6%. So as we looked at kind of where everyone was intending for that acreage to go, corn acreage is expected to increase in all states in the region for 2020. So in the Mid-South, growers have demonstrated their ability to adjust acreage based on market signals. The relative prices and potential returns of competing crops plays a significant role in cotton acreage in the Mid-South. Growers intend to plant 2.2 million acres, which is a decline of 6.5% from the previous year. So all states intend to decrease acreage. So we see Arkansas a decline of 3%, Louisiana 6.4%, Mississippi 8.9%, Missouri 2.1%, and Tennessee at 11.8%. So all states in the Mid-South intend to basically increase corn acreage in 2020. Soybean acreage is expected to increase in Louisiana, Mississippi, and Tennessee. Moving to the Southwest, intentions of 7.6 million acres would be a decline of 3.4%. So we have increases in cotton area in Oklahoma and Kansas, so a 3.3% increase in Oklahoma, 5.1% increase in Kansas, and a 4.2% decline in Texas. So as we look across the Texas regions, respondents indicated a 10.4% decline in cotton acreage in South Texas. In the Blacklands, a decrease of 8.3%. And in West Texas, respondents indicated a 3% decline in cotton acreage. Okay, so looking at the West, intentions of 221,000 acres. This would be a 20.5% decline in upland cotton in the West. So cotton acreage is expected to decline by 25.7% in Arizona, 30.9% in California, and just increase slightly in New Mexico. And as we look at ELS is expected to decline slightly by 2.7% in 2020. California growers, a drop of 3.9%, Arizona 1.8%, and then just a slight increase in Texas. It looks like a larger percentage increase just because it's a small number that we're working off of. Okay, so bringing it all together, we have U.S. upland acreage of 12.75 million acres for 2020. At ELS, we've got 12.977, or round that up to 13 million acres for the 2020 crop year. That's a decline of 5.5% from 2019. Now, based on current prices of cotton and cottonseed, total revenue is still expected to fall short of total cost. So in recent years, U.S. cotton producers have struggled with low cotton prices, high production costs, and the resulting financial hardships. Producers will continue to face those conditions in 2020. Production costs are still high, and prices are not enough to cover all production expenses for many producers. While the market facilitation program did provide some much-needed support, there's still a gap there, and the continued trade disruptions will create challenges for many growers across the cotton belt. In addition, the most recent dip in cotton prices that we've seen basically from the impact of the coronavirus falls during the 2020 crop insurance price discovery period, which further lowers the insurance guarantees for many across the cotton belt. So when we take a look at planted acreage, obviously that's just one factor as we look at total production. What we usually do is assume yields in line with recent averages. And whenever we take a look at kind of where we are right now, one thing I like to look at is the U.S. Drought Monitor, and you can see comparing last year as of February 12th to this current year's February 11th, you see a couple pockets across the cotton belt that are a bit drier than last year, but overall, most areas are in pretty good shape right now, and there's no reason really to deviate from using those historical averages. So if you use an average abandonment for the U.S. of 13.8%, cotton belt harvested area totals 11.2 million acres. Using an average 2020 U.S. yield of 848 pounds generates a cotton crop of 19.8 million bales. That's 19.1 million bales of upland, 675,000 bales of ELS. And as we look at cottonseed projections, so of course for 2019, USDA had cottonseed projection of 6.2 million tons. With lower production in 2020, cottonseed production drops to 6.1 million. And with crush levels expected to remain stable at around 1.8 million tons, remaining stocks will need to move into the feed and export markets. Okay, so our U.S. production estimate of 19.76 is almost 350,000 bales lower than in 2019. So now let's take a look at fiber use and mill use, and then we'll move on to exports. So this chart shows net domestic fiber consumption in the U.S., and that's basically a measure of the size of the U.S. retail market. So it measures both cotton spun in the U.S. and cotton consumed through textile imports. For 2019, consumption is estimated to be 18.3 million bale equivalents. We're expecting to see a slight increase in consumption to 18.5 million bales in the 2020 crop year. So as part of the U.S.-China trade dispute, the U.S. imposed additional tariffs on imports of cotton products from China. Now, I know there's been a lot of questions in the last year or so, kind of what that has looked like as far as us importing cotton products from China, so I thought this was a really interesting chart to look at where we are for 2019. So I think you can see a pretty clear drop in China for 2019, and you see an increase in India, Pakistan, Vietnam, and Bangladesh, and again, as a result of those tariffs on Chinese imports. So as we look at cotton mill use, again, I mentioned earlier that USDA estimate of 3.0 for the 19 crop year could be a little bit optimistic. For 2020, we're projecting mill use of 2.85 million bales. And again, that's based on those monthly mill use surveys where we're looking at consumption estimates. Now, as one of the largest users of U.S. cotton, the U.S. mills continue to be critically important to the health of the cotton industry. One thing that could benefit the U.S. Cotton industry pretty soon is the USMCA, which President Trump recently signed into law. It does provide, it should help boost the U.S. textile industry by including some important provisions. Now, key things to remember is that while the U.S. and Mexico have approved it, Canada has only recently started its ratification process. That's expected to conclude in the next few months, so it's unlikely that the USMCA will enter into force prior to July 1st of this year. Okay, so we have current marketing year stocks for the 2020 year would be 5.4 million bales. That's what we're going to bring in. We add that to the projected 2020 production of 19.76 million bales, 2.85 million bales in mill use. That means we have total supplies of 25.2 million, total use estimate of 19.3. So of course we'll have plenty of cotton to go around and plenty in case we have additional exports for the 2020 crop year. Now, I think this is an interesting chart to look at as we think about U.S. exports and kind of where we might be for the next few years. Now, what it shows is the very first one says May 18th. That was where we were basically prior to the U.S.-China trade dispute. So even after that started, world mill use projections were up. So you'll see that USDA had projected mill use of almost 126 million bales in May. That estimate was further increased, but as you've seen, as the months have gone by, those projections of mill use have continued to go down. So where we are currently in the February report that just came out on Tuesday, for the 2019-20 crop year, you can see that bar that's gone down quite a bit. So USDA reduced China's consumption by 1 million bales for the 19 crop year, and that's mostly due to the impacts of the coronavirus. Now, is that enough a reduction? I don't know yet. I think not really anybody knows yet, but I think it could come in lower than that as well. So as we look at world demand, we're still in a situation where we've got to get world cotton demand back up to where it was. And of course, the Phase 1 trade agreement could provide some much needed support, but there's still some uncertainty about exactly when that will be implemented, how it will be implemented, and then of course, what's going to happen with the coronavirus impact and if that's going to delay some of those purchases. Okay, so under the Phase 1 trade agreement, China's agreed to import $32 billion worth, basically, of additional U.S. ag products. So there's a base year that's 2017, and right now just the assumed base level is 24 million. Now this number will actually come from China, but these are some USDA estimates. So over a 2-year period, now a key thing to remember is that China said that they will import additional U.S. goods based on market conditions. So it's not a guarantee. The timing is also not guaranteed. They could import so much in year 1, so much in year 2, or they could wait till year 2 and import more. And then, of course, some of that could be delayed from just kind of what's going on recently. So in year 1, the total would be $36.5 billion. So you have the 24 plus the additional 12.5. Year 2 would be 43.5. You have 24 plus the additional 19.5. And they've also mentioned the possibility of an additional $5 billion per year that would be added on top of that. So in order to achieve this, China would basically exclude those products from the tariffs. The tariffs have not been removed. Now, one key thing is that the U.S. government came out with a list, and it included oilseeds, meat, cereals, cotton, seafood, other products, but cotton had its own line item, which is somewhat encouraging. But the main thing to remember is that China is not committed to tariff exemptions or import levels for any specific products. So to have the actual number estimate of cotton, we just don't have that, and I'm not sure when we will. Okay, so just to kind of give you an overview of what China does import in ag products from the U.S., for the 2017 base period, U.S. cotton accounts for 4% of China's ag imports. However, in the last 10 years, U.S. cotton has actually accounted for as much as 12% of the total. So as you can see in the chart, the year 1 and year 2 targets of 36.5 and 43.5 are actually quite a bit higher than our historical level of imports. So this is a level that China has not previously imported from the United States. So for the 2020 crop year, China is expected to increase mill use to 37.9 million bales. Part of that increase is due to the increased access to imported cotton under the Phase 1 trade agreement. Again, the projected increase may not materialize if economic growth continues to slow down due to the coronavirus outbreak. As we look at prices of man-made fibers as well in the 40s, it really doesn't help cotton demand either. So China is expected to increase their imports in the 2020 crop year to 9.1 million bales. And we continue to see a reduction in Chinese stocks, 2.6 million bale reduction to 31.1 million. So I think the important thing to remember here is that a lot of these current projections are surrounded by a lot of uncertainty. And again, this was all kind of brought about just in the last 3 to 4 weeks. So that USDA estimate of 2019-20, which was 37.5 million bales, they lowered that, of course. That was 38.5 million. So we'll kind of see how all that works out. So with expanding cotton acreage in Brazil, a slight rebound in Australia's production, and increasing stocks in India, the U.S. will continue to face strong export competition in 2020 and in the foreseeable future. Brazil continues to make improvements in infrastructure, allowing for more efficient transportation of cotton. A recent drop in Brazil's currency to a record low is also making exports more competitive in the market. For the 19 crop year, India's production bounced back by 3.7 million bales. With local prices below the MSP price, the CCI, the Cotton Corporation of India, has been purchasing cotton. So the CCC stocks are currently priced above the market and may not move as quickly over the next few months. So that is one good news for the export market, that Indian cotton may not be readily available in the market. But at some point, those stocks will have to move. India has also recently announced a plan to boost exports. Again, should make their exports more competitive. Now, one thing I wanted to point out is you take a look at Uzbekistan. Uzbekistan has historically been a larger player in the export market. In recent years, they slowly lowered their exports. They're increasing and expanding their textile industry, so they're now fully consuming their local production within their local textile industry. And for the 2020 crop year, they recently just announced a ban on exports. So we can pretty much say for 2020 and the foreseeable future, Uzbekistan is out of the export market. Now, a further expansion of the Uzbek textile industry will require them to actually import cotton. And this is a rather interesting dynamic because they've never been a cotton importer before. So again, we'll kind of see what happens with that, but they could become an importer. So we look at U.S. balance sheet. Exports for the 2020 crop year are expected to drop to 16.4 million bales. so slightly below the 2019 projection of 19.5. Now, while China is expected to increase purchases of U.S. cotton under the Phase 1 trade agreement, this outlook does assume a somewhat conservative estimate due to the lack of commodity-specific detail in the agreement. As I mentioned earlier, we continue to face increased export competition from Brazil that will allow us to, we're not going to be able to just regain all that lost market share. So for this outlook, the U.S. is assumed to export 2.5 million bales to China for the 2020 crop year. Again, that compares to 2.1 million bales for the 2019 crop year. This would represent 28% of China's projected 9.1 million bales of imports. And again, that's still way below pre-trade war levels. If we export 16.4, of course, the U.S. share of world exports will be slightly lower than the 2018 share. We combine that with 2.85 million bales of mill use, we have ending stocks of 5.9 million bales, which again is a relatively high level. So as we look at the world area is projected to decline slightly in 2020 by 2.8% due to a slight decline in cotton prices. We see lower production estimate for the world. Mill use is expected to come back slightly in 2020. World trade is estimated to increase to 44.9 million bales. Now, the important thing to look at is while world ending stocks are projected to go down, stocks outside of China, and where it says all others is 49 million bales, that's a record level of stocks outside of China. However, when we look at those stocks, a large portion of that increase in the other countries is India. So that cotton, again, may not be readily available on the market for the 2019-2020 crop year. So, of course, our outlook does not attempt to project cotton prices, but it's always important to review some of the factors shaping the current price situation. And although cotton prices were weaker in 2019 as compared to 2018, prices did improve at the end of 19 and in early 2020. And of course, that was prior to the coronavirus outbreak. We have seen a dip in prices, of course, after the outbreak. So when we look at the resulting global balance sheet, high stocks outside of China, increased export competition from Brazil, a slight recovery in Australia's production, and of course, low man-made fiber prices, we know that that's likely to have a bearish influence on cotton prices. Now, a quick containment of the coronavirus and a successful implementation of the Phase 1 trade agreement would provide some price support. So, of course, as with any projections, there's uncertainties and unknowns that can change the outcome. So for the coming year, key factors will be the implementation of the Phase 1 trade agreement and, of course, the impacts of the coronavirus. China's reduced their reserve stocks, and they're in a position to begin importing more cotton, particularly as they continue to rotate their reserve stocks. The long-running bull market is expected to continue into 2020 with further growth in the U.S. economy. However, current economic projections for the U.S. and global economy should be viewed with caution given the lack of clarity regarding the potential impacts of the coronavirus. And despite the setbacks and short-term challenges that have occurred over the past year, the overall trends for cotton demand remain promising as the global economy continues to expand and world population increases. World stocks are declining, maybe not as fast as we would like them to, but world production will eventually have to increase to maintain pace with consumption. Thank you.
Thank you, Jody. As always, a lot to take in and consider. I want to thank Jody and the economic staff at the council for that excellent report.